a direct tax, that is leave it directly on individuals or organizations as well. Okay, they will pay directly for the IT. Okay, they will file the IT. Okay, and the indirect tax means that tax will be paid by the customers. Okay, but who will collect that GST? Intermediaries, that is retailers. Retailers will collect the GST. Okay. Direct tax, as we have seen the income tax. Okay, we have already discussed the current new regime, the tax slab also. Okay, and the corporate tax. What is corporate tax? Whatever this is the tax that we paid on corporate profits. Okay, and how much corporate tax is there for existing domestic manufacturers? Plus cess and surcharge. For new manufacturing companies, 15% plus cess and surcharge. For foreign companies, 40% plus cess and surcharge. Okay. Next is MAT. Okay, this is levied to prevent a tax avoidance of the corporate tax. At least minimum they should pay. Okay. Next is dividend distribution tax. This was been abolished in 2020. Okay, till 2020 it was being used as a direct tax. Okay. Now this dividend comes under which tax? It is calculated under income tax. Okay, whatever the personal income tax is there, if you get the dividend for your shares, then you should pay under the income tax itself. The next comes the capital gains tax that we were discussing yesterday regarding what is capital gains tax. Okay, whatever the owner is having the asset, if he sells that asset, whatever profit he gets, that is called as capital gains. For that he should pay tax in the form of two types. One is short term, another one is long term. Short term is till how many months? Within 36 months. Whatever he sells his asset, for that what is the percentage of the tax? It is equivalent to, it is 15. The short term capital gains tax, 15%. Okay. Then if it is within 12 months, for the stocks, for the mutual fund, for the zero coupon bond, if it is within 12 months, then what is the interest rate? Within 15. Then what is the asset? What is the interest rate for asset then? Sorry, what is the capital gains for the assets? Physical asset. Okay. Did I dictate you or not? Capital gains tax, short term and long term. It is equivalent to new, I have told you, normal income tax slab. First one, if the asset has been sold within 36 months of owning it, in this case, the tax will be similar to the normal income tax slab that you should tell. Understood? Whatever the tax slab is there. Okay. This one, yearly wise, it gets changed. Okay. For short-term capital gains, that tax is equivalent to this one. If it is selling within 36 months. Okay. If it is stock or if it is mutual fund or if it is zero coupon bond, then it is 15%. Okay. Next comes the long-term capital gain. Okay. If the assets are sold after 36 months, then the tax will be 20%. Okay. And for the zero coupon bond, mutual fund and for the share, it is 10%. Okay. Above 1 lakh of capital gains. Both these combined are called as financial transaction tax. Okay, which are the types of financial transaction tax? One is commodity, another one is securities. Securities means shares, bonds, equity, okay, government securities, zero coupon bond, that all called as shares. Mutual fund, that all comes under securities. Commodities means goods which are non-agricultural. Commodity means goods which are non-agricultural. Okay. Means steel, gold, silver, okay, that all comes under commodity transaction tax. Okay. Except agriculture goods. Okay. Except agriculture goods, that all the non-agriculture goods comes under commodity transaction tax. Firstly, write down the STT and CTT. Let me explain. Firstly, I will explain, then you can write. I will give a time for writing. Okay. First, what is security transaction tax? This is a tax that is levied for transaction of shares, buying and selling of shares. If you buy and sell the shares, there you should just pay around about 0.1% for your profit, whatever you make from the securities. Okay. Think that you have purchased the shares, you got 100 rupees profit. In that, you should pay 0.1% for your 100 rupees profit. Understood? Okay. Next, for commodity transaction tax, whatever for the non-agriculture commodities like steel, aluminium, gold, crude oil, okay, except agriculture goods, all the non-agriculture goods comes under commodity transaction tax. For that, whatever profit you get or whatever the transaction you make, buying and selling, for that you should pay around about 0.01% for your profit, for your transaction also. Understood? Just write down now. .01. Okay. The STT, write down after this one, the STT and CTT both are called as financial transaction tax. Okay. STT and CTT. Financial transaction tax, FTT. Financial transaction tax. If they ask which are the financial transaction tax, there are two types. One is CTT and another one is STT. Yes. This is for non-agriculture goods. Just highlight that. Non-agriculture goods. Very important. Okay. Which is the world's largest which is the largest commodity exchange? Can you just Google that? Which is the largest, which is the largest, which is the world's largest, which is the world's largest commodity exchange? It is the name of the company. World's largest commodity exchange. Which is the company? Which is the world's largest commodity exchange? World's largest commodity exchange. CME Group. Okay, write down that. CME Group is the world's leading commodity exchange. And in case of India, it is MCX, Multi Commodity Exchange. Okay. World's largest. It is CME Group. World's largest commodity exchange is CME Group. But in case of India, India's largest is MCX, Multi Commodity Exchange. And this stands third place. Okay. At the global level. At the global level, it stands number 3. Just check, is it number 3 at the global level? Because in Ramesh Singh, they have given it is the third largest commodity exchange, okay, in the world. Is it 6th? It is world 6th largest. Okay, then update it to the 6th one. It is the 6th largest. Sixth largest commodity exchange in the world. In India's rank, see, in case of India it is top 1, but in case of world it is top 6. Okay? It is 6th one. In this MCX, there will be a commodity trading regarding natural gas, regarding crude oil, regarding gold, silver. Okay, all the non-agriculture products: gold, silver, natural gas, crude oil, steel. Okay. Can visit that website also. MCX India. And just see the products in that list. Okay. There are base metal like aluminum is also traded here. Write down the aluminum also in that list. aluminum. Copper, lead, nickel, zinc. Have you written gold, silver, crude oil, natural gas? Okay. Electricity also, electricity, aluminium, nickel, copper, lead, zinc, all those will be traded. Next comes the angel tax. Angel tax. What is that angel tax? Okay. See, if an entrepreneur want to just establish one of the startup company, he needed a funds. Either he need a seed funding, is a small amount at each stage, or else he want a whole amount at one stage itself. Here, when he go and approaches one person, and if that person agrees to invest the money by giving for this entrepreneur, then whatever the money he takes, for that he should pay the taxes. That is called as angel tax. That whatever that funder is there, that person is called as angel. Okay. For that entrepreneur, he is like an angel. Why? Because he is funding him, and he will not charge much high interest rate for this entrepreneur. Okay. The very minimal interest rate he will just charge, and whatever the profits whatever this entrepreneur, that person gets the profit after establishing the company, and in that he might ask the share, or else the whatever the principal amount he has given as a loan, with that the minimal interest rate he can charge. That's it. Okay. There are many of the finance